Yeah, I've got another tweet.
Michael Burry, right? The Big
Yeah,
Short.
and exactly. Just kind of like leading off of someone who, kind of called the Lehman moment back in the day.
That's how we do
Michael
a
J.
segue.
Burry. Yeah, that's a segue. All right.
And this is
But
from
yeah,
the
Michael
movie The
J.
Big Short.
He is. Yes, he is. So essentially, I saw this tweet last Friday, and he says, this morning, there were still 218 primary stock listings in the United States with a market cap over 1 billion and EBITDA less than negative 100 million. 29 of them had market caps over 10 billion, totaling 655 billion. Saying it again, all the silliness must go.
I'm going to make a guess that every one of these companies, or almost every one of these companies, are in the technology software space.
Mm-hmm.
Yeah.
Yep.
Yeah, I mean, there's probably some outside, but we just did a huge sweep, and I would agree the majority.
And we were just even focusing on the ones, we weren't even really looking too deeply at the ones with negative EBITDA. We were looking at the ones with high revenue growth that had at least some profitability and some positive cash flow. But even in that segment, which we would consider a much higher quality segment, certainly from a profit perspective, it's you had huge valuations in spite of the fact that like many of these companies had taken 80% cuts to the share price. And also other things to consider, like share-based compensation really distorting the profitability picture. So, looking a company looking like it had really strong margins, if you ignore the share-based compensation, but if you consider that in the earnings, then those profits turn into losses. So it's certainly not a situation in tech. Now there are some tech some specific names that we think offer good value, but it's certainly not a situation in tech that the recent downturn in that market has created, opportunities right across the sector. There's still a lot of risk, and I would agree 100% with.
Yeah, there's still a lot of frothiness. We went over the numbers. They got so out of whack on the high side that, the pendulum, we had the first half of this year with the markets down 20%, which is the worst first half in 52 years. We keep harping on that. Despite that, the pendulum has swung back just to slightly close to even in terms of valuations. And you're still looking at the face of a potential recession. You may or may not have that. But there's certainly more uncertainty now than when in 2019 to the levels 2020, just the start of 20 before COVID hit, but certainly less uncertainty then than there is right now. So if you're looking at valuations that are similar to that time, it doesn't factor in any of the potential shocks that could be coming forward. So, it's something to certainly look for. And we're continuing to monitor.
Once again,
whether or
this
not
doesn't mean that there isn't good value in the space.
Of course.
There is. That value has really improved for some select names. But where we're finding those is really in a lot of the larger cap, more established companies, where it's that mid cap, super high growth, focus on revenue, less focus on profitability segment of the tech market that was the most expensive a year ago and continues to still be relatively expensive.
Yeah, like we always say, it's a market of stocks, not a stock market. You don't have to buy the entire market. You can buy individual companies. And like some of the traditional FANGs or Magna or whatever they're called now, there are a couple companies in there right now that trade at valuations that we haven't seen. Like one of the companies trades at a valuation, its lowest valuations ever, and just has an absolute fortress balance sheet. And we continue to like it. And I think you'll be very happy if you bought it today and look 5 years into the future where you bought it at this price. Now, whether or not it has another 15% or 10% decline in it, trying to pick the bottom is very difficult and often a fool's game. Buying a great company at a reasonable price is what we would suggest. And, that's what we're focusing on in terms of the companies that we're buying right now.